Yesterday, we saw the market accept lower prices after rejecting higher value. Today, NIFTY tried to move up but got rejected exactly from a key supply zone. This tells us where smart money is active. Welcome back to Mind Monastery. In the last two sessions, we saw a clear shift in market behavior. First, the market moved value higher towards 23,800, then it failed to hold that value and accepted lower prices. Now today, the market attempted a pullback, but that move was rejected. Now let's decode today's behavior using volume profile and auction market theory. The previously identified levels of 23,800, which is the failed value area, which is a major resistance now, and the 23,600 to 23,650, which acted as a transition zone, remain important even now. Once the market moved below these levels, it began building value lower, indicating a shift in control. Now today's session is very important. The market moved upward in the first half, tested a predefined supply zone around 23,250 to 23,300. Let me remind you that we have discussed this level in the previous video. I highly recommend watching it first because today's move is a continuation of that auction theory. Coming back to today's movement, after testing this level near yesterday's POC, NIFTY got rejected sharply. This is a classic case of supply overpowering demand. Now look at today's volume profile. Market opened at 2320 and showed upward intention. Opening was within yesterday's value area, so we have to expect a rotation in such scenarios. And this is what exactly happened. In the previous video, we have discussed that the supply zone between 23,300 and 23,250 is quite important. And if the market holds above POC, then there can be an upward move. But today, the market tried to hold above this level and tried almost 3 times, but did not sustain and fell in the late session. Now, remember, the POC can yield valuable information if observed properly. Today, the POC tried an upward migration by the opening, then stabilized between 23,280 to 23,270 zone, ending in 23,273 level. This tells us that despite of all haphazardous movements, the value has continued to stay near the supply zone which got created yesterday. Please observe how close today's and yesterday's POCs are. This suggests the market is still comfortable trading at lower prices and buyers are not strong enough to shift value higher yet. Based on today's structure, these are the important levels for Monday. The resistance levels 23,250 to 23,300 zone, which is the supply zone and the area of rejection today, continues to be a key resistance. 2320 to 2372, which is the intersection of lower levels of yesterday's and today's HVAs, can act as resistance for the next trading session also. The major support is ranging between 23,000 to 23,950. This is the demand zone, and we have seen this as a previous reaction area. If price again moves into 23,250 to 23,300, watch carefully for rejection or acceptance. That will define the next move of the market. Now let's look at the OI charts. This is today's OI chart in the 2300 to 23,900 strike range. Comparison of call OI versus put OI tells that the difference is not very large compared to yesterday. But there were 2 instances today where put OI tried to cross over the call OI graph and then failed miserably. We have already discussed these attempts earlier in this video. Also, see that the call OI graph remained higher for most of the trading session. So the message today is very clear. The market is currently in a lower value environment and any move upward is being treated as a selling opportunity, at least for now. Until the market starts accepting prices above the supply zone, the auction remains seller controlled. If you found this analysis useful, subscribe to Mind Monastery and don't forget to like, share and comment, because every day we decode markets using volume profile, smart money concepts, auction market theory and open interest, because the goal is not prediction, the goal is understanding how the market auctions prices. Thank you.